Two. Oh, certainly great to have Dave Feldman on the show today. Can't wait for their next big event coming up Friday, November 13th, as they continue to grow over the course of 2021. Speaking of growing, speaking of the stock market, speaking of investments, Johnny, I know you have something for us this week. Please enlighten us.
I do, Coach, and I have an update on a past pick. It was Pfizer, that I said would probably come out with the first vaccine. And you saw Eli Lilly this week and Johnson & Johnson both have a company hold put up on their trials. Now, it's much different from a regulatory hold. It was a company internal thing that they found that some people got sick from the vaccines. Those things happen. It's not good, but it's not the end of the world for those companies. But Pfizer still looks like it's going to be the vaccine that comes forward. And we're probably going to find out about that vaccine sometime in the middle of October to the end of October. That means by the end of November, because it's got to be 2 months after the last shot given to people for the vaccine, you'll find out if this is going to be put into mass production. And if so, we'll have a vaccine for the first part of the year. Pfizer's up several dollars. It's a $37 stock right now. It's about 30 something when I promoted it and talked about it. It's up since I talked about it. I think you got a good chance for a huge upside here if the vaccine hits. If it doesn't hit, I still think you got a good dividend and a good company to invest in. But the news I want to talk about today, Coach, is JP Morgan. You see, used to, and I'm talking about just 15, 20 years ago in the stock market, when General Electric, GE, would announce earnings at the beginning of earnings season, everybody listened to what Jack Welch had to say, the CEO then, because that was the bellwether of the U.S. economy. He has been replaced by Jamie Dimon, the head of JP Morgan. JP Morgan reports first, and it usually leads us into know how the earnings are going to be for the rest of the year. JP Morgan had really good earnings. A lot of it was on trading. The stock is way down this year because there's very little that banks can do when interest rates are so low. They can't make a lot of money. But in volatile trading environments like we have right now, JP Morgan did great as far as their trading, their bond trading, their equity portfolio. But more importantly, and this is where it gets into the economy and what we have looking forward. There was a CECL accounting change that happened at the beginning of the year. It's current expected credit loss is what it stands for. And instead of when you loan somebody money, and if you think they're going to default, when you realize they're going to default, you put a loan provision aside for that default. With CECL, you got to do it at the very beginning for expected losses. So JP Morgan front-loaded a lot of their expected losses when the whole world thought it was going to hell in a handbasket and Armageddon was about to happen because of COVID. So they put $15.7 billion aside in the first 6 months of the year. That means they had $34 billion total set aside for loan losses. Now, this last quarter, and this is where it gets into the looking forward into the economy, only $611 million in loan loss provisions. Compare that to last year before COVID happened, before everybody knew what it was, $903 million. It's significantly down. What that means is that JP Morgan thinks that the economy is going to recover much better than what they first anticipated, and those loan loss provisions are not going to be necessary. So you're going to see they have $34 billion. Up to $10 billion could go back into their coffers if they're right. If they're wrong, it's going to cost you about $20 billion to go in. You know, if COVID gets worse and you have shutdowns and a terrible scenario, that's the far other extreme. So JP Morgan, it was a good, optimistic thing that happened today. JP Morgan is trading about $100 stock. The projected price target from all the analysts is about 116. It's got a 4% yield. I think it's a good way to play the bank market. I think it's also something that's very positive for the world going forward because Jamie Dimon is probably the best CEO in the world. And he just said, we're probably going to get through this. And we're betting on we're going to get through this in a much better way than we expected just a few months ago.